All right, welcome to Bixin Talk. This is the podcast show brought you by Bixin Ventures, where we dive into the world of crypto, blockchain, and the projects shaping the future of finance. I'm your host, Michelle, and today we're excited to have a special guest from one of our portfolio projects to discuss their innovative product and the current state of the market. So in this episode, we'll explore the fascinating world of Florence Finance, a DeFi platform that is bridging the gap between on-chain and off-chain ecosystem to fund real-world loans and generate real-world yield. We'll be asking our guests a range of questions from their journey into crypto and driving force behind building this platform, to the significance of SME lending and the recent buzz around the real-world assets lending. So we will also discuss Florence Finance plan for the near future and how their project is contributing to the real-world adoption of crypto, and their long-term vision as well. Plus, we will touch on recent banking failure and Coinbase ex-CTO Balaji's view on the potential for hyper-Bitcoinization. So sit back, relax, and join us as we dive into the world of Florence Finance, its unique approach to decentralized finance, and its also impact on rapidly evolving in crypto landscape. You won't want to miss this insightful conversation. So hello, Chiel, nice to meet you here.
Nice to be with you, Michelle. Thank you very much for having me.
Yeah, before we started, I want to know more about your story. So when did you get into crypto?
Sure. So I'm an engineer by training. I spent most of my life in banking. I left banking in 2015. I was doing a lot of restructuring work, and I had a good friend who was looking to raise money, and he thought that he should do that by an ICO, and this was in 2017, 2018, the ICO craze. And so I actually helped him to do the second only ICO in the Netherlands, which at the time was quite novel and which got me kind of started on my whole crypto experience. Tim, the person in question, was way ahead of me in crypto, but he kind of got me interested, and from then you kind of fall down the rabbit hole. And I think in 2019, 2020 is when I kind of really got sucked in, and when the seeds were sown for Florence.
So how has your perspective on the crypto industry evolved since you first got involved?
So in the beginning, I was very captured by this novel way of kind of funding and financing things, right? I mean, which was what the ICO craze was all about. And then later, I started doing a lot of thinking about, banking and the sustainability thereof, and call it the leverage in the current financial system, which kind of got me into, the kind of whole gold and Bitcoin corner of the world, which is where I think my own investment story in crypto started. And then during COVID, when there was a little bit of a lull in my kind of professional activity, I did a little bit of work with the largest exchange in the Netherlands, and that got me in touch with some people who were kind of early innovators in the space in the Netherlands, people who had launched their own layer one and had built a bit of wealth in the crypto ecosystem. And we're looking to create a safe place to store that wealth in the crypto ecosystem, and that's kind of how Florence was born. So mine is a journey that was very much led by opportunity and just what came across my path, not so much because I sought it out, but just because it kind of hit me. And it's been wonderful, absolutely wonderful.
So opportunity just come to you naturally.
What could I say?
And why don't you just invest in crypto, and what drove you to build versus just invest?
That's actually a very good question. So I did invest, and I was invested, but when I left banking, I had a very deep desire to get my hands dirty, right? I was an investment banker. You're always giving advice. You're kind of always, portraying yourself from the sideline, if you will. You're never in the driver's seat. And when I left banking, I kind of made a promise to myself that I would do something real in the real economy with real companies, and I wanted to build. And that's how I got into the restructuring sphere, so helping companies in financial trouble, helping them with my knowledge, but doing that in an executive role, so as an interim manager, so actually getting your hands dirty. And when that dried up a little bit in COVID, because everybody was either on state or on bank support, I was delving into my own curiosity again in crypto. And again, I came across this opportunity, and there was the need for somebody to actually do it. There's all these kind of people that want to invest, and people that have good ideas, but there's actually always a shortage of people who want to get their hands dirty. And I just happen to be that person. That's what I like to do. I'm obviously also an investor, but the kick of it is to actually build and to do, whether that's the team or the tech or the community, all of it. Building is what really gets my juices flowing.
Very interesting. Did you face any challenges while you're building this project?
Yeah, building is always extremely difficult, right? I think it's not for everybody, right? And people that don't want to do that, they're probably much better off investing. It's kind of the lazy way of doing it, and certainly you can probably make more money in crypto by just investing, if you will. Building is the hard way, but it's what makes me tick. So for me personally, there's no other way. Challenges, I think it's hard work. But I don't think about challenges per se. I think about showing people what you're about, what you're trying to do, what you're trying to achieve, being very open and transparent about that, and then people will come to the project or whatever it is you're doing, and they will either take a liking to it or not, right? And that's okay. But what you want to do is you want to surround yourself with people who do have an interest and who do believe in kind of what you're doing or where you're going, and build that kind of group, and then you can make things happen. That's what building is all about.
And I'm sure you spend a lot of time building this project, also building your team and the community, right? So can you share with us, how did you build your team and community?
Yeah. So again, interesting how this works in my world. So we came together as a bunch of founders who obviously had a little bit of track record in crypto. I didn't have an awful lot of track record in actually running businesses, other than ones that were already existent, and running them as an interim manager. But basically, because we kind of are all active in the space, we all have networks of people who have specific skills. Whether that's programming, front end, back end, full stack, Solidity, you name it, or whether it's marketing or design or all these kinds of things. And so again, it's this process of telling people what you're trying to do, how you're trying to do it, letting them kind of in, and then getting a feel for each other and figuring out whether there's a fit and we want to contribute. And in that way, in a very organic way, if you will, we've built a very small but loyal kind of full-time team, and around that a larger group of people who contribute on a regular basis. So it's a very tight group. We don't kind of add new people all the time. We kind of always go back to the same people because they know what we're doing and it's worked well before. And slowly but surely kind of just grow the people that are contributing, if you will. I see it very much as a collaborative effort.
So I'm sure a small group of team work together really well because you guys definitely trust each other and know each other's ability. It's better to work with.
But that grows over time, right? So I mean, if you're building a team, especially in crypto, and it doesn't have a centralized office, we're located all over the world. The team is scattered across Colombia, Germany, the Netherlands, the UK, France. So we get together maybe twice a year at an offsite. So you have to work quite hard to actually get to know each other and to get a feel for each other. But if everybody's kind of working on it full time, then that happens naturally. And I think we've been extremely fortunate to find people who have naturally found what we're doing and also working together of interest to them.
Gotcha. And what is the fascination with SMEs and solving their funding issue?
Well, this goes back to my call it, as an investment banker, you were always focused on kind of the top 50 companies in a certain jurisdiction, so the big multinationals, et cetera, et cetera. And when I vowed to kind of step away from that and to get my hands dirty, I very much wanted to do that at the opposite end of the spectrum, so in the SME space. And that's also where a lot of the restructuring work that I did was kind of focused. And in doing that, I really learned that that fascination for that part of the economy, which I previously had very little to do with, and a lack of appreciation for. But once you get into that, you start to realize, that most Western economies is actually run, and most of the employment is generated, and most of the GDP is generated through SMEs. Most Western economies, it's like 60% of GDP. So, once you start to appreciate that and you layer on top of that this realization that there is this bifurcation in the financial markets between those that do and those that don't have, access to institutional financing markets, then, there's this very obvious problem, which I call the SME funding problem, which needs to be addressed. So, when we started thinking about building a safe haven, call it savings asset, yield generating asset, to me, it was very obvious to kind of focus on an area that I was sure, needed funding, because obviously, TradFi, the banking market, for all of its bad aspects, does serve the part of the market that it serves quite well and quite efficiently. So you kind of compete with them head on is nonsensical if you're building a new business. So you kind of want to pick a spot where, they, for whatever reason, choose not to be very active. And, that is the SME space. So it is both, my own love and passion for it, but also the kind of market opportunity in that space that drove, our focus on SME funding.
Yeah. So your role, you worked in TradFi before, so you think SME play a very important role in our large economy, and that's why you want to really supporting them.
Yes.
So can you share a successful story or like any unique case where your platform has made a significant difference for SME?
So I would argue that all of the loans that we have made to date, and they're not that many yet because we're still kind of in startup ramp up phase, make a difference, because the companies that typically come to us are companies that for whatever reason are not being serviced by the mainstream banks. And that can be for a whole bunch of reasons, but the misperception is that because that has to do somehow with the fact that they would not be as good credits as they should be in order to be serviced by those banks. What is actually happening is that the banks are basically shying away from the SME space because it's hard work, it's too complicated. And what they do is they can't shy away from it completely because that would get them into trouble with the regulators. So they just try to standardize the offering that they have for those companies. And so if you don't fit into that straitjacket, you're basically excluded. So, those people are typically, they have to look at alternative funding, avenues. And we provide an alternative source of funding to those alternative funding avenues, which is, broadly defined as fintech borrowing, right? So these are existing fintech borrowers, and they each have their own niche or specialty, which they lend to. So whether it's working capital finance or asset-based finance or factoring or all these kinds of things. And basically all these fintechs, they've been around, they service a very specific need, which was created, when the banks started retracting from SMEs after the great financial crisis. But they all struggle with the same thing, which is funding. And so if we can provide an alternative source of funding for these players through crypto, through stable coins, that is also counter-cyclical in a way to the ebb and flow of the normal funding market through the institutional financing market, which is interesting. Crypto has a counter-cyclical element to it. When crypto is booming, there's very little leverage in crypto. And crypto, happens to boom at the same time that the TradFi markets boom. But when crypto is not booming, and that happens to coincide when TradFi markets are also not booming, then what happens is people retract the stable coins, and there's actually a lot of liquidity in crypto, which can then be used in order to generate a yield and to fund these platforms. So there's this combination and this weird counter-cyclical nature of the crypto and the stablecoin market, which we seek to exploit in order to help solve, only partially, to the SME funding problem through existing fintech players.
Perfect. You can see this opportunity and combine those two elements together, which solve a big problem.
Yeah. And then once that light kind of, we had the aha alertness, then it was just about, building it and convincing other people that this was a good idea.
I'm sure there are a lot of successful stories to share. And my next question is, why is RWA lending getting so much airtime recently?
Yeah, this is also, it's interesting to me, right? So when we started building this, we started building it because, we thought it was a good idea. This is pre, RWAs becoming fashionable. And certainly when we started to build, the big kind of struggle that we had in our own minds was, how are we ever going to compete with, they call it APRs and APYs that were being generated in some of these, call it, pure crypto platforms, whether it be Luna or BlockFi or Celsius or whatever. And, lo and behold, all of that has kind of, either blown up or gone away. And now all of a sudden what we are doing, which was deemed very unsexy at the time, is starting to look, less unsexy and maybe even a little bit sexy. I think the other part to the whole RWA thing becoming en vogue at the moment is that, I think crypto happens in waves of adoption. So you started with, a bunch of geeks with their internet money, experimenting, and then some people who kind of, could use that technology but didn't have access to normal payment rails started to, abuse it, if you will. So you ended up with Silk Road and, payment platforms for all kinds of people that didn't have access to the banking network, which, we can all have an opinion on. But the reality is it did allow, crypto to kind of be tested at a larger scale, and certainly proved to everybody and sundry that this stuff, actually worked. Maybe not for the purpose that people would want it to, but it did work. And so, the next phase was basically, DeFi summer, building on top of that thing that worked, primitives, financial Lego blocks that could then be used to kind of build, what would be the future of finance. The issue was that all of those financial Legos were very much kind of tested in an environment that was geared mostly towards, call it, speculative, trading. And that came with its own form of excess. I think if you take a step back, the good news is that we get to test all of these Legos, these protocols at scale, with huge volume, and with some pretty big stress moments in terms of volatility. And so, notwithstanding the fact that the use case might not have been, what people think is useful for the real economy, I don't think there was a better way in which to test at scale, some of these protocols. So now, having gone through all of that, obviously also having a few blowups along the way, et cetera, we have, decentralized exchanges, we have, automatic market makers, we've got derivatives on chain, we've got all of these fantastic elements that have been tried and tested at scale. And so now the next wave of adoption is going to be to take these Legos and to plug them into the real world. And one of the things that you need in order to build a kind of functional financial system is you need yield, and you need yield curves. You need term structure in the yield curve. So I personally think that the next wave is going to be all about bringing real world assets with real world yield on chain, and combining that with native yield, so staking yield of proof of stake type protocols. And that whole ecosystem is going to build a very specific crypto native yield curve / area on which the whole future of crypto, and in my mind also the future of finance, is going to be built. Because crypto rails and some of the elements that we've built, whether it be stable coins or some of these new decentralized protocols, are just superior to what we have in the TradFi fractional reserve banking system, and that is becoming very clear also with what's been happening over the last couple of weeks. So I think RWA is just one of the elements that is going to drive the next wave of adoption. And SME is a small fraction of that RWA. It can be real estate, it can be listed securities that are going to be brought on chain, and the world is just going to be tokenized, and the whole world is going to run on crypto rails.
Great, you just predict a little bit future trend, and what are your plans for the near future? Your project or your plan?
Right. So there's obviously lots of plans, right? So for now, we are still kind of really building the basic functionality of our protocol, and that's sort of complete. In the next couple of weeks, we are going to be opening up the project to third-party liquidity. So now everybody and sundry can kind of access the protocol, put stable coins into the protocol to earn real-world yield. And hopefully in doing so, we'll be able to scale the TVL and scale the actual lending operations, add more lending partners, and become a bigger contributor to that SME funding gap. Firstly in the Netherlands, because it's my backyard, it's kind of where I grew up, and it's where I know most of these parties and have access to them. But through the partners that we already have, I think it's going to be very easy to kind of scale that in Europe. So the UK is very much kind of next in line. And I'd love to also at some point go a little bit further afield to get some richer yields, and whether that is call it more Eastern Europe or maybe even Turkey, or whether we go further afield to Southeast Asia. Those are all things that we kind of want to consider on merit. But first, it's about scaling it and making sure that we get the basics right. So that's the near-term future, and then the longer-term future. Obviously, we would love this whole protocol to actually become decentralized. Right now, it's probably qualifies more as a kind of CeFi project. But what we want to do is we want to make it community-led. It should be an on-chain community-led bank and lending service. And that's going to take a lot of time, and that's going to take a lot of investment, and that's what we're here for.
Oh, that's a great hope for the future.
Mm.
And how does your project drive real-world adoption of crypto?
So it is my view that crypto is still, for most people, a bit scary, right? I mean, for those of us that are in it every day, we sign transactions and we do stuff on chain, and we have hardware wallets. But I think for your average mom and pop, this is still a long way away from becoming mainstream. In order to really drive adoption, I think we need to make it more mainstream. And I think one of the ways of doing that is to have financial products that are investable for mainstream. So I think of Florence Finance as an alternative to putting your money in a money market fund. And there, where in America, it's very easy to put your money in a money market fund if you don't want to put it in a bank. In Europe, there are actually very few of such investment vehicles. And so if you're not getting interest on your bank account, you either have to go a lot further out on the risk curve, i.e. actually make investments in risky equities or bonds. And there's no real kind of blended fixed income type product that is readily available. And Florence, I think, is an answer to that problem, which is a very Euro-specific one. And it kind of hits a whole bunch of birds with one stone. You're solving the SME funding gap. You're getting a diversified portfolio of yield, which is higher than what you could get on government bonds. And yet, because it's diversified, hopefully from a credit perspective, it's not that much worse. And it is something that is not readily available in Europe. So I think that could drive people that are currently not in crypto and wouldn't normally get into crypto to buy Bitcoin or Ethereum, but just want a better savings product to come into crypto. And so I do think it is very interesting to drive real world adoption from a sector of the market which wouldn't necessarily be first in line to get into crypto.
Yeah, I'm very glad to see a project like Florence Finance can help everyday pop and moms to get into crypto and to solve their problem. But they still have some concerns. They will ask us some question like, yeah, what if the SME cannot get funding from bank? How do I make sure you do the proper credit assessment to make sure this investment is safe?
Yeah.
So how does your platform employ credit assessment method to effectively evaluate borrowers?
Right. So right now, we depend very much on the partners through which we lend, and they do a lot of the credit work. Now, bear in mind, these are existing parties that this is their bread and butter. This is what they do for a living, and they do it no differently for us than they would do it, if they were doing it for somebody else or for themselves. And a lot of this stuff is relatively standardized. You've got Moody's risk metrics calculations, and you can kind of grade these credits, and then there's pricing matrices. So better credits get a little bit better pricing, and worse credits you get a little bit higher yield. And then the trick about all of this is to not go single name, but to build a portfolio of these credits. So that if you're going to build a portfolio of SME credits, in SME land, you are probably going to have a little bit higher default rates than you would in an investment grade credit portfolio. But on average, you will also get a higher yield. And so as long as those default percentages are more than offset by the higher yield, and you have a properly diversified portfolio, then actually, these SME portfolios should be as good or better than a concentrated investment grade portfolio. And that is our thesis. It is a thesis which is very hard to prove because there's not a lot of data, because a lot of the lending to the SME space actually happens through banks in Europe. And they obviously don't divulge a lot of that data. But having worked at banks and also working with our partners that basically all come out of the banking business, we know that this is actually one of the big corks on which the banks float. So the SME lending portfolio is usually one of the best performing in their book. And so if we take a small part of that, we do the same or better homework that the banks would do. We are just, picking off stuff that they can't necessarily fit into the straitjacket, which they have had to self-define in order to limit the amount of work that they want to do on this specific sector. Then we think we can actually build portfolios that have better risk reward than, alternative credit assets in, the same geography.
Great, because a lot of like a real world investor or everyday mom and pops, they have concern about crypto world, right? Crypto investments. And
yes, and I think the trick with all of that is it's about disclosure, right? It's about showing that people are actually getting what it says on the tin. And this is what the banks don't do, right? So you deliver your money to the bank and they go out and they borrow to a whole bunch of SME, and they never tell you how much money they make doing that. You just get your interest on your savings account or on your deposit account, which is, a far cry from what they make on the SME lending portfolio. In our portfolio, the amount of money that we make on each and every loan is completely transparent. The amount of, or the work that we do on the loan is completely transparent. Over time, what we will want to do is we will want to work with the actual lending partners to put as much of the data on the underlying credit on a chain, or at least make it public through our platform, so that I don't think people are actually going to do the credit work. I don't expect people coming to our platform to do the credit work themselves. But what they should be able to do is to ascertain whether it's being done properly, if they're so inclined. Right. And with a bank, that is simply impossible. But it's certainly my ambition to kind of make that as transparent as possible. And to show people that, what you see is what you get. Right. I am making these loans. We are making them in the best way that we can. We're trying to assess in the best way that we can whether these are good loans, which is not to say that, if you're going to write a bunch of SME credits, you won't have some credit mishaps. But everybody will know what we're up against, and over time we will hopefully be able to prove that the work that we do and the credits that we select perform as good or better than what you could get by holding either government or investment grade credit. And I think that is a very doable thing, and the more transparent we make it, the better it's going to be. But somebody has to do the credit work, and right now that happens through our partners.
And so right now there's a banking system issue happening right now, and I'm not sure if people still have faith or trust in banking system, because they use your money and to invest in lower risk bond. How do you use technology like blockchain technology to make sure their investment is transparent and safe?
Yeah, so the blockchain technology plays very little role in actually judging or selecting the credits. Where it plays a very big role is to verify that the money that we take from investors gets transferred one-to-one into actual loans. And there's no additional leverage, no fractional reserve, nothing gets lost in the cracks, there's nobody skimming off the top. Yeah. And to be able to show on chain exactly what happens to each dollar of interest that is earned. Now, obviously, if we're going to build the platform, then we're going to have to take a little bit of that interest and, give it back to the platform in order to grow the platform. So we won't be able to, pass through all of the interest earned, but to be able to be completely transparent about, how the interest is earned. So your dollar goes in and we fund loan A and loan B and loan C. You can see the loans, you can see the interest on each and every loan. You can calculate the blended interest. You can see how much interest goes to the platform, how much interest goes to the actual funders. And there's kind of no noise in that equation. And all of it is hyper transparent. I mean, that is completely revolutionary. I mean, it's the exact polar opposite of what a bank is, where you put your money in, you have no idea what's happening. All you know is that, it's a huge levered, machine. And if you're lucky, if you go back there, they'll have your money. But if you're unlucky and they've screwed it up, then the money's gone, and the government and the taxpayer has to bail you out if you're lucky, and otherwise they kind of bail you in, and you don't get your money back. And that, to me, is that opaqueness in combination with the whole concept of leverage and fractional reserve is what makes banking such a profitable business, such an interesting business as a banker, right? But it makes it completely untenable as a funder. And so, I think, especially with what's been happening in recent weeks in the US, we're getting to a point where people are starting to realize that, this is not a good idea. And in the US, like I said before, people have a very easy and readily available alternative, which is money market funds. But those don't exist in Europe. Not in kind of it's hard because not every country has that, and there's no euro bond market that has that kind of access readily available to retail investors. And so people have to kind of come up with different answers, and that's kind of what we are trying to do. And we think doing that in crypto, doing it without leverage and fractional reserve, is the right way forward. And when people start to realize it, as in the US, they're already doing it. It's just they're going to money market funds, not something like Florence Finance. People will opt out of that, fractional reserve system. I'm pretty sure of it, and I think it's happening at the moment.
And what is the long-term vision for Florence Finance?
Yeah, so the long-term vision is to create a kind of safe haven type asset class through solving real-world funding issues, right? So right now it's focused on SMEs. There are other projects that focus on emerging markets and microfinance, which I think is another area that deserves attention and is a very valid cause, if you will. And there are plenty others out there in the call it funding arena that are underserviced by the current banking service, and it's a very natural place to start because you don't want to compete head on with banks. But as we grow and as this gains traction and as funds flow from the traditional financing system and from the banking system into these unlevered, unfractionally reserved lending platforms that solve real world lending needs, that market can grow, and I think it will slowly but surely cannibalize what is today TradFi. So I think it is a slow process. I'm not a big buyer of that being happening in a big bang type moment. And it'll take time, but once it gets going and once people see the merits of it and once they start to understand why and how it's so much better, and the fact that they can actually get more, not less interest and rewards out of a system that is constructed in a better way, just because you're basically taking out the middleman, that is the innovation, if you will, and you're replacing that with technology, with blockchain, and with transparency, then I think it's inevitable that this wins. It's better.
So after you talk about your long-term goal, right, let's talk about the current affair on the market. So what do you make the recent banking failures and Balaji's take that we're on the verge of hyper-Bitcoinization?
Yeah, so I think it's absolutely fascinating what's happening at the moment. Mm-hmm. And there where, I'm not sure whether all your viewers will be aware, where Balaji basically made a bet that Bitcoin would go to $1 million within 90 days. And he made that bet probably about a week and a half ago. And when he made that bet...
And he put 2 million USDC into Bitcoin.
Right. He made it with two counterparties, right? So he said, I'll make it with this Malone character, Dr. Malone. And he said, I'll make it with one other person as well. So he put up $2 million. And they're still trying to structure the exact nature of that deal. But the bet in and of itself is extremely interesting, not because I think it will come true. I'm not actually the biggest buyer of hyper-Bitcoinization. But knowing Balaji and having contributed to some of his projects in the past, this is somebody who's extremely smart. And what I think he's doing is, in a very visible way, he is putting his finger on what is an extremely sore spot at the moment. And that sore spot is the actual fragility of the traditional financing system, which you've seen firsthand in the last couple of weeks in the US with some of these smaller and regional banks. And I, for one, don't believe for a second that what we're being told and what you're seeing in the mainstream media is half of what is going on. And I am quietly convinced that if a lot smaller group of people than people think would to actually put actions into taking money out of the existing system and sticking it into Bitcoin or gold for that matter, it doesn't really matter, but taking it out of the system, how easily we could prove the fragility of that system. Now, whether or not that will result in Bitcoin going to $1 million is a kind of different matter. But I think Balaji's point is extremely well made, that people should realize how fragile it is. And the more people start to think about that, the better it is. And if we can actually prove it by doing it, so by actually taking money out, which is happening en masse in the US by going to the money market funds, but in reality, then it's a closed system, so it's still in the system. If you actually take it out, so you take it, to put it into gold, or you put it into physical gold, or you put it into Bitcoin, or you put it into other crypto native assets, then my guess is we could see a lot more fragility in the banking system. And I think Balaji nor I want to get to a place where the whole thing kind of burns, but I think to have people think about this and to kind of put one on one together, so to see the fragility and to see how easy it is to push large institutions in the US to that point, and to see that the mess that it creates on the other hand, right? So in first instance, it was deemed that they would just sell Silicon Valley Bank and Signature to a willing buyer, and there'd be a small write-off. But the actuality is that they took a huge bath on both of those banks because of the way in which those sales were structured, and because of what was found in those loan books when people actually did the diligence. And so I think it is a very just cause that Balaji is fighting. Whether or not the bet is the right way to do that, that kind of put neither here nor there. And I think people should take notice of that fragility and that which is proven. And I personally think more people should at least have a plan B, which is have some or a small part of your net assets or your wealth or your savings or your deposits outside of the traditional banking system, and take your pick your poison, do it in a way that you are comfortable with. I don't advocate any particular cryptocurrency, but to do that with a little bit, I think is a good idea. And if a lot of people did that, I think you'd be surprised at the impact that could have.
Yeah, there are a lot of unpredictable things that we didn't realize, and so a lot of noise around crypto world. So what is your advice for investors on risk management?
So this is a different question, right? So this is, the current amount of noise around crypto is obviously reached, stratospheric highs with, Coinbase, the most regulated and regulator-friendly entity in the crypto space, even being sued or sent a Wells notice. And various other players, or basically all of the players, have been served some kind of notice or in some kind of legal procedure with either the SEC or the CFTC, which is troublesome as a crypto builder and as a believer. You'd like to think that regulators would give us a little bit of space to experiment and to build the financial systems of the future. So I don't think this is good news by any stretch of the imagination, but I also think this genie can't be put back into the bottle. And the reality is that even though there might be a lot of stuff that happens in the crypto sphere which we probably don't want, and which regulators are right to focus on and to try to eliminate, you shouldn't throw the baby out with the bathwater. So we have to be careful to kind of separate all the scams and the bad things that happen from the useful innovation that happens. As an investor, look, I think crypto is still a very nascent and risky asset class, and people, I think, should be quite cautious when you go into that. Stick to the larger protocols, stick to things that you have an affinity with, and size your investments so that if the regulators do something which we hope they wouldn't, or we do hit a huge soft patch, that it's not the end of your world. That said, I am a huge bull on what is happening in crypto. Notwithstanding all the FUD that's out there at the moment, I think the innovation that's happening in the various ecosystems is massive, and I also think that we have yet to see what crypto can do for, call it, the disenfranchised part of the globe that doesn't have access to first world, traditional banking rails. I like to call it the global south. And I think you're going to be surprised in the next, bull market, how much adoption is going to be driven by that global south. The reality is a lot of the protocols and the teams and the projects are all Silicon Valley led and very Western European or Northern Hemisphere, China, Japan, a little bit of Southeast Asia. But the people that really need a lot of this crypto stuff is emerging markets, places with rampant inflation and bad governance and failing banking systems. And I think they are starting to cotton on, and I think it's going to be huge in the next wave.
All right. Thank you so much for addressing all the topics and providing valuable insights. So we truly appreciate your time and your expertise, that your project is playing a crucial role to bridging the gap between traditional finance and the crypto ecosystem, to providing a new opportunities for both SMEs and investors. So now let's move on to our closing remarks and wrap up this enlightened conversation.
Well, I want to thank you again for having me. We are very keen to reach out also to the Asian crypto community. We're very proud to have Bixin on board with our project from the very start. And so wonderful to be here and to be able to explain what we're doing, and also share a little bit of my personal story with your audience.
All right, thank you so much for joining us today on Bixin Talk. It's been a pleasure having this insightful conversation with Chiel about Florence Finance. Its impact on crypto and DeFi space, and it's a very exciting future ahead. So we really appreciate your time and expertise, and we wish you and your team and your project the best of luck in your continued endeavors. To our listeners, thank you for tuning in, and we hope you found this discussion and conversation as fascinating as we did. So stay tuned for more episodes of Bixin Talk, where we'll continue to explore the world of crypto and innovative projects in the industry. Until next time, take care and keep exploring the exciting possibilities in the world of blockchain and cryptocurrency. Bye.
Thank you, Michelle.
Thank you, Chiel.